Hi everybody, it's Thursday. We're on the floor of the New York Stock Exchange with Jim Cramer to talk about today's markets. All right, Jim, Dow is down, S&P flat. What do you think?
Yeah, it's a nutty day because Cisco's down a lot, and yet I would point out that Cisco, 13 times free cash flow, which is incredible. They're buying back $25 billion worth of stock. They did have some DRAM gross margin pressure, and people feel that they haven't moved enough toward software. It's about 33%. What I would say is that this has now become a very inexpensive big cap tech stock. If you're looking for one, I mean, a lot of people who would be drawn to Oracle should be thinking more about this one. I think it's very, very good, and you want to buy it right here. Now, when a stock's down a couple bucks, remember, that means you buy at the end of the day, because that means someone is taking the stock down, and they want to get out by the end of the day. So just be mindful that it'll probably also be down maybe 30, 40 cents tomorrow, unless somebody upgrades it. That could happen. Walmart is really interesting. Walmart up a lot in the pre. Then comes down. I think Walmart's doing a lot of things that are what a private company would do, which is because the family owns 50%. And I have no problem buying Walmart at a discount. I certainly like that more than buying Kroger at a premium, because Kroger bought 5% of a company from Britain. So those are the big Dow stocks that are hurting. One Dow stock that I really want people to focus on is General Electric. I don't know Steve Tusa personally. I had him on the show. But Steve Tusa is the big bear, and I was begging him at 12 to upgrade GE, and he did not do so. Now that it's at 15, you can see that GE's become a play on oil. Now, we're using Schlumberger for action alerts, but GE is a play on oil, and that's something to think about, because if oil were going down, then Tusa would be right. But the fact that oil's going up could make Tusa wrong. And one of the reasons I point out Tusa is he has a fabulous, fabulous piece today about Honeywell, which is a huge position for us, saying that it's a stealth e-commerce play. So I don't want Tusa to be too dominant in my broadcast here, but he's the man. He's the man to follow.
Tylus Tusa?
Yeah, Tylus Tusa. He's very atraditional for JP Morgan. There's a lot of analysts over there that I follow very closely. Matthew Boss, who correctly said buy Macy's versus, say, Kimberly Greenberger, who told you to sell Macy's, and by the way, reiterates her sell today. Macy's, and in my dealings with them, it just keeps coming back to omni-channel, comes back to investment, comes back to cleaning up the balance sheet, and comes back to an eye for fashion. Jeff Gannett, who will be at our corporate governance conference June 7th. Jeff Gannett beat back the activists by execution. He's one of my favorites.
You will be sitting down with him at that conference.
Yes, I will.
We're excited for that. Meanwhile, Jim, for the broader markets, though, 10-year still well above 3%, wreaking havoc on home builder stocks.
Look, the playbook says you have to sell the home builders, and people use the playbook. Now, there's enough people out there who believe that single stock risk is a danger. This is one of these things that has become in vogue. I like the index funds as an exposure to the stock market. I do not like single stock ETFs that wrap all the good ones in with the bad ones, and that's being wrapped up. So, it just may just speak about those in general, the ETFs. If you have a home building ETF, what I would tell you is that there are at various times some home builders are doing better than others. Lennar is doing very, very well, and that has acted incredibly badly and is down a huge amount. So if you do believe that there's a level where interest rates are going to stabilize, you're going to see this group go up, and Lennar is the one. But like I said, the playbook dominates, and right now the playbook says sell these. I don't like playbook thinking when it comes to ETFs. I don't mind playbook thinking when it comes to what's supposed to happen when interest rates go higher.
All right, and Jim has a whole column on home builder stocks. Yes. Go to realmoney.com for that. Meanwhile, Jim, Guggenheim has a note out on WWE. They're bullish on their TV renewal.
What they're saying is that Ultimate Fight Club is getting incredible amount of money thrown at it, which means that WWE is going to get even more. It's kind of a it's a piece. It reads like that they know that there's going to be negotiations that are going to go very, very well. WWE also has an over-the-top subscription business that's very good, and it's been a magnet. I've had them on, and they're remarkable. I like WWE, the stock, even up here. I think it's value.
Yeah, up 12% this morning.
It's just a value. But I said that at 30. I became aware of WWE through Strauss-Zelnick. I mean, the power of it. I always knew WWE. The power of it through Strauss-Zelnick, who talked to me about WWE's Take-Two game, Take-Two, by the way, I went out last night on Mad Money. I said, listen, if they're selling this thing down 6, you got to buy it. Well, people heard, and I feel good. I feel good about that.
You also had the CFO of PayPal on Mad Money last night. Again, not worried about Amazon.
No, and remember, that was a 7-minute interview with John Rainey, who's fantastic. But if you want to get the real skinny on the longer-term view of PayPal, I urge you to go look at the video from our teach-in, where I spoke with Dan Schulman for about an hour. You remember, they have an analyst meeting next week. There's 2 analyst meetings that are defining things. There's a Micron analyst meeting next week. People want to be in ahead of that because they're going to be very bullish. Thank you to Sarge Guilfoyle, by the way, who at the teach-in said you got to buy Micron, and that was about 10% ago. And then PayPal, Dan Schulman with just a miraculous look at how the company's doing. I thought that was fabulous.
And then there were worries about Square Cash. I mean, endless kind of
well, Square Cash,
here.
I mean, what matters with any of these versus Venmo is a personalized way to send money with emojis. Don't laugh. People like to look and see what their friends are doing, and you can do that. If everyone's going to a place, a hot restaurant, you see all your friends going to that hot restaurant, which I wish I knew, then you can, you'll go to that place too. So it's, what people are missing about PayPal, and I think they'll talk about this, is that Venmo is a community of millions that use it constantly. The one that's on L by Bank of America, whatever, that does not get used constantly. And I know that people love Square. And look, I've been behind Square since 12. I'm not some newcomer to Square. I was the first to have, I had Sarah Fryer on, okay, who was the fabulous CFO. I got behind it at $12 because I said, you know what? I'm no longer worried about their balance sheet. We use Square at Bar San Miguel, which is how I knew how good they were and are. I was on it on the cryptocurrency thing, so I'm not denigrating Square by any means. There's, as Dan Schulman would say, there's room for Visa, there's room for MasterCard, there's room for Square, but PayPal's going to be the dominant one. And those who keep selling PayPal because they believe that when eBay breaks up, it's going to hurt them. Take a look at all the deals that they can have that they were restricted from. Because John Rainey said that as soon as that deal's over, PayPal's going to make more money.
PayPal, an important holding of Action Alerts Plus.
Very much so.
Jim, you had the CEO of Tableau Software on Mad Money last night.
I thought he told a good story. Now I'm trying to figure out the difference between Tableau Software, which is individual dashboard, and Splunk, which is the entire network. But there's room for both. And the CEO of Tableau was a very big, important person at Amazon Web. So Amazon's a good partner of theirs.
50% of Charles Schwab's employees using Tableau Software.
Great to save a lot of money.
That was incredible. Trying to get people to analyze data rather than just
they spend way too much time packaging it and not enough time analyzing it.
Jim, who do you have coming up on the show tonight?
Well, I've got this first Trinzio, which is an old spinoff of Dow, from when Dow decided that they wanted to raise their multiple to get him as a commodity. But Trinzio's been made less of a commodity, more proprietary. And then I've got Canopy, and everyone wants pot. This is the pot. This is the blue chip pot company tonight, Mad Money. And also, may I point out, happy birthday to Emma. And I was there first. Well, of course, there were other people in the room that I remember.
Happy birthday, Emma. Jim Cramer, thank you so much.